Free and clear of the chatter from Wall Street, you're listening to Talking Stocks Over a Beer, hosted by hedge fund veteran and newsletter writer Mike Alkin, who helps ordinary investors level the playing field against the pros by bringing you market insights and interviews with corporate executives and institutional investors. Mike sifts through all the noise of mainstream financial media and Wall Street to help you focus on what really matters in the markets. And now, here is your host, Mike Alkin.
It's Tuesday, March 12th. Thanks for joining. Today we're going to spend some time talking about what most of you who listen would rather I just talk about and not ramble on about other stuff. But we're going to talk about uranium and the nuclear power market. And I have a couple of guests today that I have a lot of respect for. One is the CEO of a publicly traded company, and the other I got to know on Twitter. And having spent a number of thousands of hours over the last few years doing a deep dive into the uranium space, I can tell fairly quickly on Twitter, or when I'm talking to someone who's done their homework or knows the industry really well, and and the other guest today is ranks right up there and brings a level of depth to his commentary that I thought it would be really interesting to have him on and share his views, and he's going to join me as we interview our CEO. And so it's a very interesting time, and in the uranium space, it is a market that, to me, in my career, offers the most asymmetry I've ever seen, and nothing even comes close with regard to the risk reward. And when I think about risk reward, I'm thinking, well, what's my downside and how much upside do I have? And in terms of the asymmetry, right? How much am I risking, and what's my ultimate reward? I always come at this stuff as if I'm wrong, right? Because in investing, you're certainly going to be wrong sometimes. And if I'm wrong, what's my downside? And if I'm right, what's my upside? And that's what I talk about asymmetry for me in the uranium market. It offers an asymmetry that heretofore I have not been acquainted with before in my investing career, in terms of the upside potential versus the downside potential. And, when I started coming at this market, I don't even know, 3.5 years ago or so, I came at it with a fresh set of eyes. Throughout my career, it's been a lot of deeply cyclical names, supply, demand, fourth grade math, right? It's how much you sell into something and how much demand is there for it, and then go find out where the imbalances are. And as I started peeling the onion back on uranium, I realized, holy cow, this is the most opaque and the most complicated market I'd ever looked at by orders of magnitude. So many layers of it, not a lot of information. But that's great when it comes to a market that's been left for dead like uranium had. Commodity was down 90%. Number of companies declined from 500 down to less than 50. Institutional investors, because the market cap of the industry was so small that most institutions couldn't invest in it, they were gone. Most sell-side analysts, the guys at the investment banks who write research, gone. And that's a beautiful market in terms of not having a lot of eyeballs on it, because you can often find things where there's a recency bias. The most recent outcomes are extrapolated into the future. And if you could do some research, field work, peel that onion back, and you can find information in the field that is different than consensus opinion. Consensus that is long in the tooth, consensus that has that recency bias, it can make for spectacular returns in any market. And that's what I saw with uranium. And as I sit here today on March 12th, 3.5 years, maybe longer now than when I really started first looking at it, my level of conviction is far greater today than even when I thought, holy cow, this is something I've not seen before. So we're going to dive into today as to what's going on, the dynamics in the market. We're going to spend time talking about supply and demand and secondary supply. I know it's something that a lot of people ask a lot of questions. They ask me a lot of questions, and we're going to talk about the big sources of secondary supply and what it means, how it forms, how it gets there. So really, just try and dive deep down. And the guests that are going to be joining us are Brandon Munro. He is the Chief Executive Officer of Bannerman Resources, an Australian listed uranium miner with a project in Namibia, in Africa. And I've gotten to know Brandon over the last couple of years, and I have a great deal of respect for his market knowledge. One of the things I look for, because I do a lot of the macro uranium work, supply, demand, very deep dive on that, is something my team and I do a lot. And it's something I look for when I'm speaking to a management team. I want to see, are they quoting back to me the industry bellwethers for their macro data on the industry? Because that's uninteresting to me, because that's consensus. But when I'm talking to somebody that is doing a deep dive on the industry themselves, like I and team have done, that's more interesting. Because then I know they're peeling the onion back, and that they have a different insight. So, and that's Brandon. Brandon has, from the first time I spoke with him, really a great understanding of the macro uranium market, the drivers, the risks, the opportunities, and has done his own modeling, which is a big deal as far as I'm concerned. Yeah, because we've done ours, and that encouraged me to, I think I started talking publicly about it in the spring of 2017 about this is a no-brainer type market. And, here we are, the uranium price is meaningfully higher. There's a reason why the equity prices are stagnant. That's going to come. But if my downside is de minimis and my upside is what I think it is, time is fine. But you have to do the macro for that. And Brandon brings a great insight into that. For full disclosure, Bannerman is part of the portfolio of the fund that I run. Again, do not take anything away from that, meaning don't go out and buy it because I own it, because it could be a very tiny position for us. So, or not, but I'm not going to tell you that, but it's not in any way, shape, or form. Do your own analysis, do your own work. But I do like to disclose that it is a position in the portfolio. But again, don't read anything into that whatsoever. And my other guest is Malcolm Rawlingson. And Malcolm he's a hoot. He's great. He's met him via Twitter. And he is a guy with a bachelor's degree in nuclear engineering and 50 years in the nuclear business. And as I started seeing Malcolm start to chime in on some of the conversations, I don't even know how long ago it was now, but a while back, I said, I like this guy. He's a like-minded thinker. That doesn't mean we're right, but I like him. And really, really knowledgeable at great depth of the industry. So I thought it'd be great to have him on the call. And Malcolm's a Canadian, and he is an avid single malt Scotch drinker. And hopefully we could get him to share with us some of his favorites. So without further ado, Brandon Munro and Malcolm Rawlingson, thanks for coming on.
No worries.
My pleasure, Mike. Great to be on your podcast.
It's always a pleasure to speak. Brandon, you and I speak plenty, have great conversations. Malcolm is a Twitter extraordinaire in uranium, a 50-year nuclear engineer with great knowledge. And first time we've actually spoken, we go back and forth a lot on Twitter and offline on Twitter. But thanks. So Brandon, as the CEO of Bannerman Resources, Australian listed company with your project in Namibia, the Atango project, share with our listeners your background, how you became the CEO of Bannerman and your journey through the uranium space.
Well, I'd call it a somewhat unconventional journey, Mike. I haven't come through a technical background. I'm not a geologist or an engineer or a nuclear physicist by trade. I studied economics at university and then went through a legal degree and ended up working as a mergers and acquisitions lawyer. And I live in Perth, Western Australia, one of the mining centres of the world. And really to work in corporate law down here, you end up predominantly working for mining clients. And I was cutting my teeth on mergers and acquisitions during the last uranium boom. So, for example, the specialist firm that I was with, we had the pleasure of acting for Summit during their defence with the spectacular acquisition by Paladin Resources for about 1.2 billion. One of the better returns on investment that we saw from juniors back in those days in the sector. Other clients are now named brands in the industry. And that was an extraordinary experience, seeing from an economic and a finance and a corporate point of view, the intensity and the amount of heat in the last uranium boom as it moved into a consolidation phase. From there, I worked as a mining executive and in 2009 had the opportunity to fulfill a dream, which was to go to Namibia. I do have a family background from South Africa. My father was born in South Africa, and that side of the family had always raved about Namibia. And whenever they went on a big road trip to Namibia, I was busy. And so that gave me a chance to go out there. And so initially I worked for Bannerman, working on their environmental impact assessment and management plan.
Brandon, I'm going to stop you 1 second. I hate to interrupt, but so many people that I talk to, and they'll ask where uranium mining is and predominant. You mentioned the countries, Namibia being one of them. And I'll speak from an American's perspective, which many are ignorant about Namibia, and they think, oh, Africa, and they get scared from a jurisdictional standpoint or a safety standpoint. Explain Namibia quickly for listeners, and then continue.
Yeah, and look, it's an understandable thing. Africa's an extremely diverse continent, and there's more than 50 countries. And if you haven't been there before, you probably, what you've seen in the media and through the news and through documentaries are perhaps the best of nature and the worst of humans. Mm-hmm. So Namibia is best described by the guidebooks, and they call it Africa Light, or I've also heard it being described as Africa for beginners. Mm-hmm. And it's very much that. It's got the second lowest population density in the world after Mongolia, definitely the lowest in Africa. It's a very open country, a very safe country. I lived there for almost 6 years and never so much as had my car broken into. My family, including my young children, felt very safe and at home there. Politically stable. The people are very peaceful. It's a very diverse culture. Although there's only a couple of million people in the whole country, they come from 11 different tribal or ethnic backgrounds. So it's very diverse and very interesting from that perspective. And part of the time in Namibia, I worked very remote up on the border with Angola, which had only 20 years before been strewn with landmines and war-torn and subject to all of those sort of stresses and strains that you have in a war zone. And during the peaceful transition to a sovereign nation that the United Nations oversaw in 1991, they totally cleaned all of that out. And they had a very effective form of reconciliation after the tensions that they'd had there. So whilst Africa is still subject to a number of challenges, health challenges being one of them, economic challenges and development challenges, in many respects you get the best of stability and friendliness and an open society with the best of all of those economic needs that drive a very strong development agenda. And the uranium sector in Namibia certainly benefits from that.
Which is a very strong uranium sector. It's been doing it for quite some time.
Absolutely.
Yeah. Okay, so I didn't mean to interrupt. So if you can continue with your background.
No, please do. So that was 2009, and I had the opportunity to go to Namibia working with my predecessor at Bannerman And we were in the process of getting our environmental and social approvals for the Etango project, which had just completed a PFS back then. And as you know, and as I'm sure your listeners know, it's an extremely sensitive commodity to be working in. And obtaining an environmental and social approval is not only vital to be able to move a project forward, it's very important for the host community. And if it's not done in exactly the right way, you find yourself very restricted on the types of financing that you can then bring to bear on that project. It really needs to be subject to IFC best principles and equator principles and so forth. So it was an important piece of work. I was pleased to say that we obtained all of those approvals back in 2010 and they're still on foot. And I enjoyed it so much that I stayed in country until almost exactly 8 years ago. My role then was corporate development, VP corporate development effectively. And what became apparent very quickly after Fukushima was that I wouldn't have a lot of activity from a corporate development point of view. It was quite clear to me that the market was, and then the uranium sector and all of the uranium producers were looking very much inside the industry. I think there was a lot of consolation going on. I think there was, unfortunately, not enough reflective consideration of what the broader implications would be. And so I decided to leave the sector. But I did stay in Namibia. I set up a copper company. We floated it on the Australian Stock Exchange. We subsequently did a joint venture with First Quantum Minerals, which was the largest copper producer in Africa, one of the copper giants these days. And we ultimately sold that business at the end of 2015. So fast forward a little bit, and here I am wondering what I might do next. And I was very fortunate to get a tap on the shoulder from Bannerman's board to come back, and this time as CEO. And that was 3 years ago last Saturday. So it's been a fantastic journey the last 3 years.
Great. We'll spend more time on what you're up to now. But Malcolm, share with listeners your background.
Oh, it's very different to Brandon's there. I'm very technical background by comparison. I mean, my whole career has been in nuclear engineering. I have a degree in nuclear engineering from London University in the UK, which I got about 50 years ago now, so I'm an old guy. Once I graduated from there, I did research work in atomic weapons, which can't talk much about. No. But after that, I went to work in a power station in the UK as a reactor operator. So I've got quite a number of years of operating experience in operating nuclear power plants and fueling them and all the things that you have to do to make them work. And I got an opportunity to come to Canada. It was a bit by accident, really, but I applied, didn't think I'd get the position, and I did. So here I am in Canada. That was in 1982. And I came over with the intention of doing reactor operations work in Canada, but they offered me a position training nuclear operators here. So that's what I did for a number of years. I worked at a number of power stations in Canada, Darlington, Pickering, both of the Bruce site power plants. Did a lot of different work, emergency preparedness I did for a while. So a very wide set of experience in the nuclear industry, both in the UK and in Canada. I retired in 2008, and just when Fukushima and all the rest of that was about to happen. And I had looked at the previous uranium board market, and I'd always been interested in uranium investing and the technology behind mining and all the rest of the activities that go into producing uranium, diffusion, enrichment, and centrifuge enrichment. So that's sort of material I studied outside of the positions I had with Ontario Hydro at the time. And so I've always been interested in how the stuff actually gets out of the ground and comes to end up in a nuclear reactor, and how you fuel nuclear reactors and why you fuel them the way you do. So it kind of blends into my whole background in this business. So really, I started investing in uranium around about 2009. Done quite well in some areas, NextGen particularly, but others as well. So that's where I come from. Very technically oriented, I suppose you'd say. Have a pretty good understanding of how reactors work. What you need to do to make them work, and also the economics of them. How you do this in a cost-effective way. As you know, one of the big problems, or if you want to look at it as a problem with nuclear power plants, is they're really expensive to build up front. Mm-hmm. The capital cost is very, very high compared to other power plants, mostly because of all the safety features that they have, which other plants don't have, of course. So it's a different background to Brandon for sure. But
that gets me
a
excited,
really interesting perspective on it.
Because our listeners get the benefits from some really different perspectives. Because I have a different perspective too, right? I come at it from a different side. I with the exception of over a 20 plus year hedge fund career, investing in a lot of different industries. For me, it was a lot of deeply cyclical industries. I'm a contrarian, and so I like looking for things that people hate, and I like shorting things that people love. So only if the work says I should. But I came at this thing with a fresh set of eyes back in 2015, and for me, I think in 2007 at the peak, in 2011 after Fukushima. My team and I might have looked at it for a brief cup of coffee. And I think, we had a lot of industries we were managing and looking at and investing in and pretty quickly said, oh, this is kind of complicated. So let's just, there's other stuff we could look at that are more pressing. And we didn't do anything. And in 15, it just it had been so decimated, the industry, 500 companies down to 50, market cap from over 130 billion down to 4 billion when I was looking at it. And half of that was one company. I noticed all the investment firms, almost all of them, there were a few left, but most of them disappeared because there was no banking business to be done, no commissions to be generated by the trading desks. The research analysts, most of them had lost their jobs, who were uranium analysts. So it was completely abandoned. And that to me is exciting from an investment standpoint, because so rarely do you find something that's abandoned. Then I had to go out and ask myself, well, is it abandoned for a reason? Meaning, is it a permanent reason, or is there something more to it? And that's when I started peeling the onion back and trying to understand. For me, it was about, being a casual observer of nuclear power as an American, a Westerner. In my mind, it was more like, geez, nuclear's kind of dying. That's what I thought. And I thought, well, it's kind of dying. And what about wind and solar? And wind and solar I had looked at over the years, but really more as component makers. We would short some of them, but we didn't really spend much time on that. Was more company specific stuff, but didn't spend a lot of time on the nuclear story. And so I said, let me go out and prove, if I could prove the bear case, if I could prove that nuclear power is dying, that it's wind and solar are going to eat its lunch, and that it's just way too expensive to run and build, then I'll go look at something else. And what struck me right away when I started looking at this space was, holy cow, it is so opaque. First of all, it's complicated, right? Trying to understand the fuel cycle, there's so many stages to it. There's mining, there's conversion, there's enrichment, there's fabrication. It's not easy. And then secondly, there's not a lot of data out there. And then when the sell side firms had disappeared, now you're just kind of looking for data, and you realize there's only a couple of sources out there that have it. And so for me, the first journey was, let me go and try and prove, see how it stacks up versus wind and solar. Where do they stand versus each other? What I realized was, wind and solar is going to grow. It's going to grow more than nuclear power. That's sure. Renewables are fine, but renewables can't do what they need to do for this as this world becomes more electrified. They have a role, but that nuclear power with its carbon-free source of power generation and the scale it can generate it at, this is going to grow. It has to grow. especially if the world wants to meet its carbon emission goals. So as I started doing that, what struck me was the closed loop nature of the industry. Like I said, there's a couple of sources that are out there, and in a bear market of 6-7 years, I guess at this time it was 5 years, it starts to wear on people, and people start to believe in the industry that it's never going to end. And I noticed that. And what I came away though is I started to build a list of every reactor out there, and I started to get really draconian on the closures. Okay, let's go to every country where they generate nuclear power. Let's say they're going to shut these reactors down in these countries wherever they've talked about it. Now look at the new builds under construction. Holy cow! It's a 1.5% grower, maybe 1.25%, 1.5%, but it's a growth business that's trading for a fire sale. So that's how I came at it. So what I'd like to do, if we can, guys, is talk about demand. And Brandon, I in the intro, I talked about CEOs. One of the things I really like is when I could talk to a CEO who's done his own analysis on the industry. I don't come across that often, because a lot of times I hear the main bodies that put numbers out quoted back to me. You struck me differently. Because when we started talking, you had been doing your own analysis for a while on it, and I like that. So talk to me about the demand. Talk to Malcolm and I and listeners. Tell us about how you came at this business modeling. 3 years ago, you come back to the space. You had to have the same questions. Where are we now? Because the industry had been devastated. Talk about the growth, the way you view the growth the growth in nuclear power.
Well, you're right, Mike. We do our own modelling, and I think that's been very important in terms of making both the correct and right strategic decisions. And 3 years ago, in terms of reassuring investors who had much of the same questions that you had during that initial brief cup of coffee. Yep. So we've built a model both on the supply and the demand side from the ground up. And in the chats that you and I have had over the years, Mike, I think our approach to modelling has been really quite similar, and in a great deal more detail than a bank typically would and an analyst at a stockbroking firm typically would. But what we see from the demand side is the interesting thing about nuclear is your line of sight for demand out to about 7 or 8 years is really quite predictable. Mm-hmm. For a start, nuclear power plants, they take about 5 years to construct, and they take about 5 years to get permitted and financed. It can be a bit longer than that. There are examples where it's shorter, but as a rule of thumb for listeners, that's what you're looking at. So it's not so hard to form a view, give or take, how many plants will come on over the next 5 years, and roughly how many you think might come on in the next 5 years beyond that. And then a little bit of magic is required, because you need to form a view in the context of a bear market where everyone around you is down in the dumps, including the industry when I joined 3 years ago, about what the picture is going to look like beyond that. And we can come back to that. Then the other side of demand is you need to form a view on how many plants are going to close at the end of their initial permitted operating life, and how many plants are going to get life extensions. Mm-hmm. That doesn't operate on quite as short a cycle, and it is more susceptible to political interference both ways. As an overall trend, what we've seen is a very significant propensity towards life extensions. And most commercial reactors were designed initially for a 40-year life, and there's many examples now of reactors being extended out to 80 years. Mm-hmm. And we also see big political swings. So Spain being a very recent example where the government was all in for phasing out nuclear power as soon as possible, and now under pressure for improving emissions targets and so on, they've realised that they simply can't do that. That is a irreversible path to failing to meet climate change objectives. And so there's been a turn on the heel style backflip in terms of their decision to keep the plants open.
France has backpedaled from reducing their 75% dependency, by 2020, 21. Now you're looking into the 2030s, right? it's not that easy to do.
There's a big difference between the politics of nuclear power and the practicalities of actually doing it. And I think a lot of the political pressure that's from Macron or on Macron to shut down nuclear power is pretty much offset by the practicalities that you just can't do it that easily. And that's why he's made these promises. And similarly in South Korea, the same applies, where the politicians are pandering to whatever the word is, playing to a particular audience for their electoral success, but the practicalities of shutting down large numbers of non-carbon producing power plants is very large, very high economic impact. Particularly South Korea, that's now an exporter of nuclear power plants, that's not going down well with the industry over there. Because if you haven't got a domestic industry, then how are you going to export them and support the exports that you've built?
It's a great point, Malcolm.
There is a big difference between what the politicians say and what the politicians want to do or can do. And what they can't do is shut down large sectors of their generating capacity and replace it with wind and solar. It's just not practical. And, as much as they would like to think so, it's not going to happen. I see similar things happening in the States as well. Many states want to have a desire to shut down nuclear power plants, but when push comes to shove and they have to do it, there's a whole different ballgame in play. And it's, I think, the rate of closure of nuclear power plants has been very much overestimated by the industry. I think these plants will be running for 60 to 80 years, as Brandon said. Many of them because they can. I mean, they're built very well. They're very reliable anyway. And if the components can stand up to the radiation effects over long periods of time, which they can, then you can run them for 80 years, and that makes them extremely economic. So there are all those considerations. I don't believe the rundown curve that I see in some individuals and forecasts that, there's going to be massive closures of nuclear power plants. It's not going to happen. And if people are basing their forecasts on that, they're going to be wrong. Demand is going to be significantly higher.
Malcolm, that's a good point. And Brandon, I often I see that. I had Mike Schellenberger on the podcast a few weeks ago, the nuclear activist, and he was a real born and raised a hippie, as he likes to say, and he was a anti-nuke guy for a number of years until he looked at the science. And he said something, I forget if he said it on the podcast or when I was talking to him offline, but he basically said, look, the nuclear power industry does such a bad job of promoting all of its attributes. Instead, the three accidents have cast a pall over the industry. When we really look at the numbers, it's the number of deaths have been de minimis, and he says it's really just a messaging standpoint. So it seems like politicians like to get elected by taking an anti-nuclear stance, but then the reality, as Malcolm just said, comes in, and it's fascinating. It's as though they need a top-flight PR person to come in and really message what nuclear power is. But Brandon, so back to the demand stuff. How are you, as you were modeling this out, how are you thinking about it?
So I think that we will see tremendous demand growth outside of that predictable window that I mentioned. And the predictable window itself of 5 to 10 years is positive. I'd see demand growth slightly in excess of the 1.5% that you've articulated. Yeah. And particularly if you put a slightly more optimistic view on shutdown, so that is net demand growth. And if you take Malcolm and my perspective on shutdowns, you'll see that closer to 2% over the near term. And for listeners, new plants have a first load factor where the initial fuel rods are equivalent to about 3.5 years of nuclear power consumption. And so a new reactor connecting to the grid has a disproportionate effect on demand because of that first load.
Yep.
Now, we see tremendous requirements for nuclear power growth, particularly in the big industrial centres of the 2030s and 2040s. China, India, and Russia, as well as some other large economies in Africa and elsewhere, Brazil and so forth. Now, the reason why we see such a big imperative for nuclear in China is China has a very significant rate of growth. So the analysts are crowing a little bit about China coming off a smidgen, but yet in last year, the growth rate in China was greater than the entire economy of Australia.
Right.
So Australia is by far not the most significant economy in the world, but we are doing a little bit down here. So that's quite an impressive feat.
Exactly, it is. Yeah.
Now, the thing with China is they can't continue their 70+% reliance on coal, and they're building out renewables at such an astonishing rate that they are already obtaining peak penetration of renewables into what is otherwise a stable grid. So I see large growth potential for nuclear as part of the growing pie as China increases its requirements for electrification, but also a very significant requirement for nuclear beyond those numbers as China attempts to displace its reliance on coal. And because of the pressure points that intermittent renewables is placing on the grid stability, they're just not going to be able to displace coal with anything other than baseload. So that gives them two options. It gives them nuclear and it gives them hydro. China's already the world's largest hydro producer by a long shot. They're producing about 300 gigawatts of hydro. They've had some spectacular hydro events, including floods that have killed hundreds of thousands of people. And to give you an idea, for them to recover 150 gigawatts of coal displacement from hydropower, they would have to build the equivalent of 6.5 Three Gorges projects, Three Gorges being the largest hydro project in the world. Now, to create and build Three Gorges, they had to move more than 1 million people and rain down a realm of environmental damage downstream. That is just no longer possible in the modern China. So they need to look elsewhere. And the numbers that you see typically quoted for Chinese growth, I see as an absolute baseline. I see significant growth beyond that in the same way that every other industry in China has grown in the last 10 years, be it railways, hospitals, apartment blocks, you name it. They've all experienced exponential growth. And nuclear power's time is coming to participate in that level of trajectory of industrialization.
And you mentioned China, India, Russia, but Africa, as the story unfolds and you see advancements in Africa, how does Africa avoid becoming? How can they not have to rely upon, to some extent, nuclear power as those economies start to grow?
So as you listeners would be aware, the only nuclear power plants currently operating in Africa are operated by Eskom in Cape Town.
Yep.
And that's 2 reactors. So less those 2 reactors, the continent has no nuclear power.
Yep.
However, what we have is more than 10 other African nations are in discussions either with Rosatom or the Chinese for introducing nuclear power. So there's a long list of requirements where they effectively need to become accredited with the IAEA before nuclear power can be introduced. Now, there's a couple of reasons why African nations are so keen to establish that. The first one, which I think is very understandable in the context of any developing nation, is nuclear power is in many respects the pinnacle of industrialization. Mm-hmm. It's operating with some of the most sophisticated technology in the world, some of the most incredible science in the world, and it's proving that as a nation you can attain the level of responsibility required to do this. The other thing is that particularly China and Russia have understood that the export of nuclear power plants gives a level of geopolitical bilateral influence and prestige that I think is absolutely unsurpassed in anything except perhaps space. Yep. And that's because if you look at the life of a nuclear power plant, let's call it 50 to 80 years, that is a very long-term relationship that is baked into the strategic fabric of a country, which is power. And because of the way that nuclear power plants are financed by the Russians and increasingly the Chinese, they're financed effectively on a build, own, operate basis. So the very successful Rosatom model, if you take Bangladesh or even Turkey, for example, and certainly a number of the conversations that I understand are taking place in Africa, Egypt, for example, they don't need to prove that they have the full range of technical capabilities to design, construct, operate nuclear power plants, because under the build, own, operate model that we're starting to see deployed now, Rosatom can come in, they can finance it, they can build it, they can send their own people to run it and train the locals over time. And very importantly for the nuclear fuel cycle, they're quite happy to provide the nuclear fuel and then take it away at the end. So when you start to extend that build, own, operate model to a 50 to 80 year offtake agreement, you can see why it offers such a premium level of sophisticated bilateral influence.
Brent, I have, my view is things begin and end with energy. I mean, without it, you can't have an economy. And as I look at the Chinese and Russians and how they have masterfully vertically integrated the nuclear fuel cycle over the last couple of decades, and from buying uranium mines in Africa, we'll leave out uranium one in the U.S., but from buying uranium mines to conversion to enrichment to fabrication to building and financing these reactors, and like you said, the geopolitical influence and control it exerts over an economy. Once you've industrialized and you're hooked on it, you can't get off of it. And you think about the Russians and their influence on natural gas for Europe, and it really is amazing. And you look at the U.S. and the West and how their influence and they've let the whole nuclear fuel cycle basically implode right before their eyes. And it really is. It's a big global industry. And oftentimes when I speak with investors who are more Americanized or Western, they don't have that global view. And I think that's dangerous when you're thinking at nuclear power, and you can miss an opportunity because it is such a global market, and so much is taking place in other parts of the world. And I come from an American perspective. I speak to a lot of the listeners are U.S. based, and we have Australian and others, and Canadians. But I lump the Canadians in with the Americans. They may not want to hear that, but in terms of the view, the viewpoint. Yeah, Malcolm, go ahead. Sorry.
One thing I'd like to add to what Brandon said there is the demand that's being created by the nuclear reactors that are under construction. I think what's often missed in this whole process is that these are not the reactors of yesteryear. These are huge, huge reactors. The four in the UAE are 1,300 megawatts each. The EPR in Flamanville in France and the ones that are being built in Hinkley Point in the range 1,600 to 1,700 megawatts. The same with the one in Finland. So just by way of comparison, the 1,300 megawatt plants have about 193 fuel assemblies. The EPR has 241. So these are a much bigger demand on the supply of uranium than previous reactors were. So although there will be reactors coming offline, that's true, they're generally smaller reactors. So there is a big difference between adding 55 reactors of the order of 1,400 megawatts and adding and taking off a few reactors of 600 or 700 megawatts.
Fabulous point, Malcolm. When you lay out them all in a spreadsheet and you see that, I've heard people say, well, X number of reactors are coming offline and X number are coming online. It's apples and oranges, because in many cases it's twice the size. Yeah, that's a great point. Yep.
The other part of it is all of these reactors, the 55, are all coming on stream at about the same time. I think there's 13 scheduled to start up this year, another 13 the following year. Yeah. Some of them have been delayed, but that just pushes the demand out. That's just nuclear power. Yeah. It's a feature of the business, unfortunately, but it seems to be anyway. So these reactors, when they do come online, they are brand new reactors, and they take a lot more fuel than older reactors that have been running. Just as an example, in a steady state reactor, you'd replace about between a quarter and a third of the reactor core every fueling cycle, and those run about a year to 18 months, depends on the reactor and what their fueling cycle is. But with a new reactor, you've got all brand new fuel. All of it has to be produced and installed into the reactor, and that fuel cycle takes about 2 years, from mining it to refining it to bringing it to a fuel assembly plant in an enriched format. So there's a lot of work involved in doing that, and it's not just like copper where you dig it out of the ground, you refine it, and now you've got copper. It's not like that at all. There's a 2-year lag around that, maybe 18 months in some cases. But if you compare a steady state reactor that, say, replaces a third of its core every 18 months, the new reactor has 3 to 4 times the amount of fuel. So the demand of those new reactors in their early years is equivalent to 3 times that. So you're looking at the equivalent of 165 reactors coming online.
Yep.
165 steady state reactors coming online. So it's a huge demand peak right at the time when there's a supply trough.
Well, that's something, Malcolm, that just gets so overlooked, like, to 3.5 times the initial fuel load. And those reactors, you can see the schedule and when they're coming on. And like you said, there are some delays and stuff, but it's a massive demand drain, a uranium drain. And it coincides with what really is the crux of this whole market, because this market, as I started looking at this years ago, what struck me was the structure of the market. And what I couldn't get my head around was, why after Fukushima is everyone increasing production? And in 2012, 2013, and I didn't have the answer right away. It was sitting out there. I just didn't know it. And those who knew the industry at the time, but well, I know why. But it's because the industry works off of, for the most part, such long-term contracts that can go 7 to 10 years. So when Fukushima melted down and 54 reactors came, and 13% of world demand came off the grid, uranium miners were still producing at a torrid rate because they were protected under contracts that were signed during the last peak, when everyone panicked in the utilities. Not panicked, but they secured supply. And they acquired uranium in 07, 08, 09. And so for a uranium miner, what they were looking at was this big market. I want to morph into this conversation about other sources of supply, but they were looking at a major overhang in the market called the megatons to megawatts program, which the Americans had incented the Russians in 1993 to downblend 22,000 intercontinental ballistic nuclear missiles into low enriched uranium, and they would take that uranium into the U.S. reactors and put them in. And that was a huge amount of supply coming into the market. That was scheduled to end in 2013. So the market was looking forward and saying, well, that amount of supply is going to come offline, and by golly, sure enough, the Japanese have to bring the reactors online, and we're protected by long-term contracts, and we're going to, as those contracts start to roll off, the supply is gone. Well, if you looked at that contract waterfall, and we kind of laid out the waterfall and said, well, geez, that waterfall really starts to hit around 2020. So if anything had gone wrong in 2014, 15, 16, where more supply was coming online than anticipated, that could hurt the market. And that's kind of exactly what happened. You had the US DOE, Department of Energy, put some uranium into the market. The Japanese didn't come online, and still haven't, to the extent that people, anywhere near the extent people thought. And so you had this overproduction coming, and it really influenced the market. But now we start to get to a contract waterfall. So Brandon, if you can talk about the contract expiries, the nature of the markets when you're doing your modeling, how you see that viewing, because from our standpoint, we think 2020 is about 20-25% is uncovered, but that rapidly accelerates. And the fuel cycle, Malcolm, as you just mentioned, is 2 years. So the question I often get asked from investors is, why now? Well, why now is because, as Malcolm just said, supply is being sucked out of the market. Demand is growing. As Malcolm said, we've got 56 reactors under construction. You have the which is tantamount to 3x that with the initial fuel loads, while supply is being squeezed. So, how do you, Brandon, when you're looking at the why nows of uranium, how do you factor in the contract expiration book when you're thinking about it?
Well, I think what we're operating under at the moment is one of the great distortions of recent times in uranium, and that's the Section 232 action that's being undertaken in the US that I'm sure your audience is very familiar with. And so the reason I call that a distortion is for the best part of the last 18 months, the market has been in watch and wait mode or sitting on hands mode to see how Section 232 will play out. And it's in this time frame that the time pressure that you mentioned should have come to bear. So on our analysis, there is a bit of buffer that the utilities and others have got, and that's been in the form of mobile inventory. So that's given, in particular, the utilities some capacity to watch and wait without it becoming dire. But because of the types of numbers that you mentioned, 25% from 2020, and that accelerates rapidly from there, we do have a situation where the inventory holdings within the entire fuel cycle are going to become very stressed over the next 6 to 12 months. And so I would expect the utilities need to come out of the 232 cloud, guns blazing in terms of procurement strategies and what they need to do to avoid being under significant financial and time duress when those uncontracted volumes start to really open up away from them in 2020 and 2021.
You mentioned something that I want to touch on, and it's a key word, and it's a word that I don't think is necessarily understood. And you said mobile inventories. And one of the things people look at, I just spoke to a group the other night of, it was like 50 people in New York, a bunch of family offices. And I talked about my uranium thesis. And somebody said, oh gosh, there's so much inventory out there. And they had seen some quote somewhere about the, 1.5 billion, 8 billion pounds. And, it's, you say, well, that, and you consume upwards of 200, let's say, round up, 1 million pounds. And that's a lot of inventory. And, but it doesn't work like that. It's the amount of mobile that somebody can access right away. So explain to listeners the difference between total inventory numbers and mobile, because there's a dramatic difference.
Absolutely. And inventory has, since the very early stages of the Cold War, simply been an ongoing feature of this sector. And immediately before the collapse of the Soviet Union and the drawdowns that you started to describe in terms of the megatons to megawatts program, the inventory, the commercial inventory, or the inventory for nuclear power, was running at about 2 billion pounds. So what we have today is likely to be less than back then. It comes in many, many different forms. So of that estimated 1.8 billion pounds, there is a proportion that is held by producers and traders and other operatives in the market who are buying and selling or looking for an opportunity to sell, and that's regarded as mobile. It's material that can be sold into the market when the seller sees a price that they like. So you might call it available or mobile and so on. But what those headlines fail to address is a very large proportion of that inventory is held for strategic reasons. So, for example, utilities in Europe are required by law to hold a certain amount of inventory as a strategic reserve. It gives them energy resilience. Strategic reasons in terms of financing reasons and other energy resilience reasons at a utility level, but also strategic reasons from a sovereign perspective. So when you look through Asia, for example, Asia has suffered in the second half of the 20th century from energy insecurity, Japan being a classic example. And so those nations, they see the advantages of nuclear fuel in that it's incredibly energy dense. So it's been said that Japan can store 10 years of nuclear fuel inside a single warehouse.
Yep.
And so those quantities are held for strategic reasons, both from a defensive point of view and a energy resilience point of view, and in China's perspective, because they want to build an export industry of nuclear operators and nuclear reactors. And then you've got another layer of strategic holdings, and that is holdings that are held for the defence requirements of certain nations. So that material is far from mobile. It's not going anywhere.
Yep.
The governments of the scale that we're talking about, it's a rounding error on their fiscus. The other thing about that £1.8 billion is an awful lot of that material is below spec material. In other words, it's depleted tails, it's slightly irradiated uranium. It is material that it's best described, for those who understand the mining game, it's a little bit like the tailings that come out of a mine. Yes, there is a little bit of zinc in that. Yes, there is a little bit of copper in that, but gee, it takes a lot of effort to get it out of the tailings facility.
Yeah.
And to include that as inventory misses the key point here, which is that material is not going to find its way into the nuclear fuel cycle unless you have a very, very strong economic driver, price, or you've got a very, very strong political driver. In other words, the country that possesses those inventories runs out of the stuff.
Yep.
So that £1.8 billion, to then convert that to 5 years of inventory, which is, I think, the Wall Street Journal headline that you're talking about, is simply misleading.
Could not agree more. I mean, we think inventories are very, very manageable and not outside the realm of historically where we've seen them, and certainly where market turns occur. And if you talk about the last market turn in 04-05, there were 24 reactors under construction, and there was significant new supply coming online. Versus today with 56 and under construction and no new supply coming online. And we're going to touch on supply in a moment. But, Malcolm, one of the things that that we see a lot about when we talk about production, and we see demand, 1.5%. Malcolm said, Brandon sees you could pencil out maybe 2% if you want to be a little optimistic. In some cases, if you take some of those planned and forecasted ones, or planned and proposed, maybe you could even get a little bit more. But so as I was saying, that we saw these long-term contracts that were protecting the miners, and we didn't see production cuts until January 17, when Kazatomprom, which is the largest producer in the world, Kazakhstan's 41% of the global market. The Kazatomprom, the state-owned entity, which is now partially floated public, is about 22% of that. So half is through JVs, half is through themselves. And they cut 10% in January 17. It ultimately became an 8% cut because they had to get buy-in from the JV partners. And they had another cut announced in December of 17. We saw 20% over 3 years against what their planned production rates were. And then you fast forward into 2018, and Cameco, the largest Western publicly traded uranium company, took the largest mine in the world offline, called MacArthur River, took 18 million pounds out. So we've seen supply destruction take place on the primary side. And that's part of the healing of the market. But a big thing is, I started going through this market in 2015, 2016, and started getting my head around it. The thing that jumped off the page to me was a secondary source, and it's an interesting market in the fact that there's primary mine supply, which has always trailed demand, but it's been made up by secondary sources, and one of them is re-enrichment of tails, is one of them, and some selling of the Department of Energy in the U.S. had wanted to pay for an environmental cleanup at 2 old gaseous diffusion plants, so they sold 5 to 7 million pounds a year of inventory. But one of these occurs at one stage of the fuel cycle, And it really has been the 800-pound gorilla that has weighed on the market for the last several years. And it happens at the enrichment process. And it's called underfeeding. And I always use I heard Dave Cates use this analogy a few years ago, Dave being the CEO of Denison. I thought it was good because I struggled. Once I learned what it was, I struggled to put it into layperson terms. But Dave said, look, think of an orange juice machine. If you wanted to get a gallon of juice, you'd squeeze some fresh oranges over it. And if you needed to get a gallon and a quarter, a gallon and a half, if you kept squeezing, you could probably get more. And that's kind of, I thought, well, that's pretty good because at the enrichment in the centrifuges, where they take uranium that comes out of the ground at 0.7% that needs to be enriched up to 3.5%, 4% for nuclear power, they enrich it in these centrifuges. And when there's less demand and they have excess capacity, they could keep spinning these centrifuges and wring out more enriched uranium product, which they could sell into the nuclear power plants. So EUP is the end product that they sell into the nuclear power plants, which is essentially, has been at times, by our math, up to 25 million pounds a year, which has been like MacArthur River plus some. And it's been a huge overhang. So Malcolm, I know you've done a lot of work, and having lived in this world, talk to listeners about the impact of underfeeding and kind of how it works from a nuclear engineer's perspective.
It's that's a good analogy. I like that one. I've heard that one before, but it's pretty accurate.
The credit goes to Cates. I took it from him.
I gotta like that one. I'm going to remember that one. But yeah, it's very similar to that. In natural uranium, when you dig it out of the ground, you get the isotope that you want is uranium-235. You don't care about the rest. It's 235 is the one that fissions and produces the energy. The other component is uranium-238, which doesn't produce, is not fissile, although it does produce energy when you stick it in the reactor because it makes plutonium, which is fissile. But that's just a complication. Excuse me. The key thing is that when you enrich uranium, in the ideal world, you will take every uranium-235 atom out of the natural uranium that you've produced from the ground. But to do that is a law of diminishing returns. You need more and more and more centrifuges to extract that last bit of uranium. So yeah, it's technically possible to do it. I'm not sure you could get down to 0% uranium-235, but you could get pretty close if you really wanted to do it. But there's no point because there's a cost point where it becomes uneconomic to do that. There are a couple of really good articles in Cyclone U308 recently. I'd certainly encourage people to read them. It describes the process very, very well. Yep. It's a two-part series. And the key thing is that from those articles and from my own research is that you've got to understand that enrichers want to make money. They're companies, they're corporations. They're not benevolent societies that produce enriched uranium for the uranium business. They want to make money. So how do they make money? They make money by selling enriched uranium to end users, which are the utilities. Now, it's very interesting that you said that the uranium, the way the uranium market has behaved over the last few years is that the contracts for natural uranium were long-term contracts. So people felt comfortable in continuing to produce uranium, and exactly the same thing happened with the enrichers.
Yep.
They were working under long-term contracts. So the SWU price, the SW stands for separative work units. It's a measure of how much energy and therefore money you need to put into enriching uranium. The price of SWUs was fairly constant, and then it started to go down as demand for enriched uranium fell away, notably in Japan. Japan used a lot of enrichment services, and it caused the price of the SWU price to drop. Now,
and for context, Malcolm, I'll put it at folks at the last uranium peak when uranium was 137. a separative work unit could have gone for $175 to $200, and
Yes, sir.
at its trough, it was $35 just last year. And today it's moving higher. It's sitting in around $45, $44. So I just wanted to wrap context around that, Malcolm. So
excellent. But it's what people don't understand is that you can't just shut down centrifuges. The old method of enriching uranium was with a gas diffusion, which was very, very energy intensive, very costly. You couldn't do this with a gas diffusion system. You could not take tailings economically and take them back up to natural uranium. It can be done, but you're losing money because of the energy that you need to do it. With gas centrifuges, you can do that. It's not as expensive a process as gas diffusion is, and all enrichers, every single enrichment plant in the world now uses gas centrifuges.
And the energy cost is about 1/10. The electricity cost to do that is about 1/10 of the old plants. Yeah,
huge difference. Yeah, that's why they've done it. It's the same reason I said earlier. They want to make money, so gas centrifuges are the way to go. So they're all gas centrifuge operators now. The problem with gas centrifuges is that they're difficult to start up and shut down. Ideally, they want to keep them running constantly. Now, if your demand for enrichment has dropped off, how do you keep these centrifuges running? You risk damaging the plant if you shut them down. These things rotate at tremendous speeds, hundreds of thousands of rotations a minute. So and they do it because you have to spin the uranium-238, which is the heavier isotope that's in the UF6 gas, to the outside, while the uranium-235 stays in the middle, or tends to. Doesn't all stay in the middle, just tends to stay in the middle. So if you do this over and over and over and over and over again, you get a lot more U-235 than you have in the initial uranium feed, UF6 feed. So if you want to stay in business and you don't want to wreck your plant, what do? Do you produce uranium, enriched uranium, and just store it? Well, you can't do that because enriched uranium is not just one enrichment. It's a range of different enrichments. Every fuel assembly has a slightly different enrichment because of the core of the reactor. So the enrichers would be taking a huge gamble if they made, say, a couple of tons of 4% enriched fuel, and they might not have a market for that. So they have to make it to exact specifications of the buyer. The only way they can get over it is to use tailings, which they've already got. They don't have to buy that. It's already sitting in drums out in warehouses. They don't have to buy that material. They can take that tailings material, as Brandon said, subject to certain limits, and re-enrich it because it's now at, say, 0.5% U-235 as opposed to the original 0.7. If you take it from 0.5% and take it up to 0.7%, you're basically producing natural uranium. You're now a natural uranium supplier in direct competition with the miners. Now, the uranium enrichers are still making money, although not very much, on that new supply. So they're going to sell that into the spot market to make money while they're not enriching to the 3 and 4% that they would normally do for the utilities. So when the contracts start coming in to enrich uranium again for the utilities, which is going to happen, it's bound to happen, it's inevitable, because you can't run PWRs, which is the majority of the reactors in the world, on natural uranium. You have to have enriched uranium. Therefore, you have to have enrichment, and it's done to about somewhere between 3 to 4%. Varies depending on the reactor. So all of a sudden, when the enrichment demand starts to pick up, and the number to watch is the SWU price,
yep.
I'm a firm believer that it's the SWU price that is the precursor to a uranium bull market, not the spot price. The spot price will follow. But in this market, which is very different to the last one, because there are no gas diffusion plants, they're all gas centrifuge plants, that natural uranium supply is going to come off the market quite quickly because you can't run two different enrichments through a bank of centrifuges, you have to have one feedstock. So if your feedstock is tailings and you're moving it through the enrichment plant to produce natural uranium at 0.7%, you can't enrich to 4% in the same train of enrichment centrifuges. So you have to switch very quickly from one to the other. So when those contracts start to come in, two things happen at the same time. One, the natural uranium supply on the spot market from enrichers dries up. And two, the enrichment supply is going to the utilities to create fuel, which is what they want. So two things happen simultaneously, and I think this is what makes this market so different to the last one. It's not going to happen. I think it's going to happen very quickly once the enrichment demand picks up. And I see signs of that already. The SW price has gone up quite a lot in the last few months.
At the end of Malcolm, at the end of October, I spoke at the Nuclear Energy Institute conference in Boston, and we had done some work. And one of the things that we had seen was just from a technological design limitation standpoint, a Western centrifuge is designed to spin tail assays of 0.18, and the Russians can spin it down to 0.1. And when you blend the market,
doesn't mean they will.
Exactly. And when you blend the market shares of the two of, half of it is Russia and half is the West, it's about 0.15. Well, that's where tail assays are. And we thought, there's not much more lower tail assays you could get. So you're kind of pushing the limits there. And I talked about that. I was talking to fuel buyers, and I said, I think you're going to see secondary supply recede. And we had heard that the enrichers were at $35 SWU, because the conventional wisdom was they'll make money at any price. It doesn't cost them anything to run these things. It was a very, very 50,000-foot view. And the more work we did on it, we thought, well, wait a second, that's not really true. And both enrichers were there. Urenco and 10X were there and at the conference, and they basically said, look, there is not a lot of EUP in Europe. They did a survey of the crowd, and it was like 93% of the hands went up and said, they thought that SWU was that EUP was abundant essentially, and that SWU pricing would stay low. And they said, look, we're not in the business of underfeeding. We are in the business of enriching. And one of them said, we will enrich only to the extent that it funds our internal research and development. But it was kind of a wake-up call. And from that point, you've seen SWU go from the mid-30s now to the mid-40s. And to your point, I think that is the precursor. That's what you need to really be looking at as what will drive this market. And I think it's just so misunderstood. And like I said, at 25 million pounds, it's been an enormous overhang. And that switches quickly, right, Malcolm? I mean, that changes quickly when all of a sudden SWU pricing goes up, and that's like pulling another MacArthur River offline.
That's right. The size of it is quite large in this marketplace. It's not well recognized that has been and still is to some extent where a lot of this spot uranium is coming from. People have said that it was the Japanese selling U3O8 back into the market. Yeah, I can buy that. I think some of that did occur. But for security reasons and the fact that they had already assembled a lot of that material into fuel assemblies, I think that was over-exaggerated. I think there was a lot less of that going on than people think. And what really has happened is that it's the enrichers keeping their plants running to create natural uranium and selling it back into the spot market. That's where the majority of this supply has come from. Very difficult to put your finger on it. There's not a lot of data out there. It's very closely guarded information, but nevertheless, it's when you look at the numbers and the psychology of the Japanese utilities, it's very unlikely they would have done that to the extent that people said they had done it. I'm sure there was some of it went on that way, but in the early days after Fukushima, but I'm sure that in the latter years that's not been the case. I think
Cameco is in the market buying uranium, and they came out when Tim Gitzel has spoken, saying they've done it buying on the spot, but also to do some market intelligence. They put requests for proposals out. They wanted to draw in the sellers, and they were hoping to see the Japanese how much they had, and they haven't seen it. At least that's what he said publicly. So, Brandon, so we have a 1.5% growing industry. We have 56 new reactors hitting the grid, as Malcolm said, 3.5 times as you said, 3.5 times the original on the fuel load. So you've got a significant amount of new demand for uranium as these hit the grid. You have secondary supply that is starting to shrink. One of the arguments that I'll hear sometimes is, well, so what? You've got all this supply, that primary supply that came offline, and there is at $40, it's all going to come back online. And so there goes the imbalance. So talk to listeners about how you view the formation of this supply deficit and your view on incentive price for both those that are on care and maintenance that have been pulled offline, curtailed, and the future demand, future supply that's needed to meet the demand that's down the pike.
Well, as you referred to, Mike, we have had very substantial supply disruption, predominantly in the last 12 months, but it has been building for some time with Rabbit Lake and other significant mines shutting down. If I talk about that first, because that's probably the objection that comes up more often, which is, as you say, shucks, you've got all of this production that's just sitting on ice waiting for $40 a pound and it's going to hit the market again. And it wasn't helped by some of the disclosures that we had in the Kazatomprom IPO registration document, which provided quite a long list of mines that were said to be on care and maintenance. But I think what listeners need to understand here is that many of those mines were put onto care and maintenance for technical reasons, and the economic conditions meant that the owners of those mines didn't have confidence that they could fight their way out of a bleak technical situation. You then had a number of those mines, including Rabbit Lake, that have got very limited remaining resources. So Rabbit Lake being a good example, it's only got about 3 years of remaining reserve inventory. So you're not going to turn a mine like that on very easily and bring 500 people back on to mine it for 3 years.
Right.
Either there needs to be a huge amount of exploration to define additional resources and reserves, or it's the sort of mine that maybe you would transition a workforce from another mine that's closed just to see it out. And then if you turn to the viable mines that are on care and maintenance, and I think the most interesting of those are MacArthur River and Paladin Energy's Langer Heinrich mine in Namibia. Cameco, I don't think, is going to just simply turn MacArthur River back on the moment they get a minimum price. And the reason is that Cigar Lake has a reserve only out to 2027. And in the same way that the utilities contract protection really starts rolling off from 2020, so too does Cameco's contract book. So I think Cameco's first priority is to make sure that Cigar Lake is protected by contracts out to 2027. Cigar Lake is an enormously complex mine. It has an extremely highly skilled workforce that have learned how to manage the complexities of that mine. And you just wouldn't want to even imagine sending that workforce home until the mine has completely run out of reserves and reached the end of its economic life. So I believe that Cameco's first priority needs to be protecting Cigar Lake and ensuring that that contract book is absolutely stuffed full all the way out to 2027. Only then would MacArthur River be a contender for coming back on. So let's just say that $45 was the magic number, and Cameco thought, okay, we need to see $45 and then we start to build a contract book. Well, it's not like you'd see the uranium price hit that magic number and you'd turn the mine on next week. First of all, the process of entering into long-term contracts to fill a mine like that is likely to take at least 6 months, probably more like 12 months. And it's not going to be for immediate delivery. Typically, as you said before, a long-term contract is for delivery starting in between 3 and 5 years' time and ending between 7 and 10 years' time. So even if Cameco was out there aggressively contracting from MacArthur River right now, those contract deliveries are unlikely to start coming on board for a couple of years. And overlaying and probably running in parallel with that is the complexities of bringing a mine back on stream from care and maintenance. So they do have a skeleton crew. I'm very confident that Cameco is investing properly in ensuring that that mine is maintained correctly. But you still need to find out how many of that workforce haven't found jobs elsewhere, how much retraining needs to be done, how many new gaps need to be filled in the workforce, etc., etc. And the longer that that mine stays on care and maintenance, the harder and longer it's going to take to do that. If you look at Langer Heinrich in Namibia, Paladin has recently announced that they're going to use the opportunity while it's on care and maintenance to run some improvements to that mine and try and extend its mine life. So that's going to be technically out of order for, I would say, at least a couple of years. And again, they then have all of the same timing issues that I described. So the whole idea that there is this wall of uranium that's just sitting there waiting for a switch to be flicked and it starts churning out of the ground again from those sources is ill-conceived and rather naive. So that's my perspective on the mines that are in care and maintenance at the moment. And then when you look at what a lot of the bear commentary in uranium has pointed to is these types of available uranium without looking at the other side of the coin, which is mines that are currently operating that are depleting their reserves and running out of reserves and tapering off. And the volume of current production that tapers off by 2025 is actually quite startling when you model it. So when we look at the ability and capacity of supply to meet future demand, pretty much every viable, advanced, definitively proved project out there needs to be on board by 2025 simply to make up for the amount of depletion in supply that would have occurred as more established and older mines have run out of mine life. And that's without starting to go and consider how we're going to meet the needs of a growing demand trajectory, as you've mentioned. So that's one of the reasons why we feel so optimistic about what needs to occur in the supply sector. And there's been very little investment in exploration, as we well know, particularly over the last 8 years since Fukushima. And the great levelling mechanism is economics. So the price will need to increase to the point where enough supply can be brought on to meet that what we see as being a very substantial deficit going forward.
Well, we did our work and looked at we modeled out at 30 some odd projects of new projects that could come online that are meaningful, and they all need, with the exception of the Salamanca mine in Spain for a few million pounds, which they say is 40, but everything else needs at least $50 per pound to incent production. And it's not just to say it's not, and those aren't management decisions. Those are financing decisions. That's where you're going to get a project finance deal done. It requires $50 uranium. So it's not like a choice. That has to be done. And as we look at it, that you need several tens of millions of pounds of that to come online for it to even begin to fill the gap. And those projects are stuck. They're stalled. It's hard to get financing right now. So, I mean, you got to think in dog years in uranium. And as those projects keep getting backed up, our view is it just really, it makes the problem just get worse as time goes on.
Well, that's quite right. And then the other thing to realize is that the thing that really slows uranium projects down, apart from lack of front-end investment, but systemically throughout history, it's the environmental and social licensing that slows uranium projects down. There is a quite appropriate level of caution that's exercised because of the radionuclides that can be released and need to be contained during mining. And then there is an enormous layer of unjustified concern that is put on top of that. And that's both at an environmental level and a societal level and a political level and even a geopolitical level when you look at the pressure that Germany tries to exert on EU member states, for example. And as the uranium sector picks up in terms of economic incentives, those time-absorbing factors, they don't get any faster. yes, a company can throw money at accelerating a definitive feasibility study, for example, but it's very, very hard to curtail the long, arduous process of getting those approvals. And in some instances, a buoyant economic situation actually makes it tougher because the bear market has, to some extent, had an effect of reducing the amount of interest group interference in uranium projects, because in many cases, a anti-nuke group might look at a uranium project and say, oh, gee, that thing's so far from economic production that the market's doing our work for us. We don't need to picket and protest and interfere here. As that uranium economic constraint starts to lift, these groups need to become more motivated, and in jurisdictions where they do play a role and can be effective, I think we'll see them start to become a lot more active, therefore elongating the systemic delay path that most uranium projects suffer from.
Yeah, it's a great point. One of the things, as far as the curtailment ones I hear, let's touch on Kazakhstan for a second and Kazatomprom, and all of Kazakhstan. What I hear is, they're out there, they're now public, they're now talking, and they are, let's say, producing 56 million pounds of uranium, and their nameplate capacity is about 71 million. And their whole strategy is value over volume now, whereas in the past it was really a Soviet mentality, which was produce, produce, produce. The money generated, the cash flow generated goes out into the communities and pays for roads and hospitals and education, and keep producing. And then when they went through this privatization transformation of their state portfolio, turns out one of the crown jewels is Kazatomprom, and as 40% of the world market, or Kazakhstan and Kazatomprom being half of that, if you had some discipline and took a value over volume strategy, then you could really exert some will on the market, and that's what they've done. But people worry when you get back to the 40, because they are the lowest cost producer, as they say, that they could just turn the spigots on. Now, let's say that's all true, and let's say that they have the capital and the cash flow to do all that. And I'm not sure that they do, but let's say they do. Let's take consensus, and let's take all guidance as given. So right away, the average person that's looking at the space says, oh, well, the Kazakhs can turn the spigots on. Okay, let's go from 56 to 71 million pounds. Again, I'm suspicious of that, but let's say it's true. So what? It doesn't solve the deficit that's out there for the next several years, because the deficit is meaningfully more than that. So I'd like to hear your guys' view on the deficit that is out there. At least our view is it's much bigger than that.
Yeah, I think it is. I have a lot of questions about the ability of Kazatomprom to just turn on the taps just like that. Those are in situ leaching mines, and they deplete over a period of time, and without drilling new wells and all the other things that you need to do to make those production facilities productive, you're just not going to be able to get back to where you were without significant investment. Maybe they have that, don't know. But if they do start to turn the taps on, what's likely to happen? It doesn't matter, because there's still a significant deficit. There was a piece that I read about a year ago, I guess, that China anticipates that it will consume all of the world's uranium by 2035. So, and I can believe that, because their reactors that they're building are large, they're building a lot of them, and they're not slowing down. There's been a little bit of a stall in the number of reactor orders recently, but I think that's just temporary. So one country, and remember, China has very little uranium of its own, and it's the elephant in the room, because if it becomes the size of the U.S. market, let's say 100 reactors, but 100 reactors of 1,300 megawatts capacity, the amount of uranium you need, plus the security of supply that China demands, which is about 7 years. I haven't seen this number written down, although I've heard it mentioned many times, is that the Chinese government requires each reactor operator to keep on hand 7 years worth of fuel supply for each reactor. If that's the case, you can see why they are building Husab, why they bought the Rossing mine, and all of the other things that they're doing to ensure that they have a guaranteed supply of uranium. Because not only do they have to fuel these reactors, they have to fuel new reactors, a lot of them, which increases demand, and on top of that, they have to add 7 years worth of supply as a security backup. Because, like I said, they don't have any of their own, very limited amounts of it.
Yeah. So, no, and we think 7 is an absolute minimum that they would keep. So, yeah,
it's likely to be more than that. Yeah, I agree with that, Mike. I think it's probably more than that. But if you look at that as from a demand point of view, there aren't enough mines even to supply China. So Brandon mentioned it earlier. The current mines that we have, the big ones like Cigar, they're done in 7 or 8 years' time. So how are they where are the contracts going to come from when you need supply out for 5 or 10 years? There are no mines in operation that can do that. So there is going to be a huge deficit when you start the contracting cycle again. And the contracting cycle hasn't started yet. There's been almost no contract signed in the last 2 years with any of the major fuel suppliers, discounting Russia, of course, which is a bit of an unknown. But in the Western world, very few contracts have been let for uranium. So all of those contracts are going to have to be fulfilled. And where is that material going to come from? I don't think it's going to come. Even if Kazakhstan was running at 100 million pounds a year, it's still not enough to supply all of that demand that's coming on stream. It's why anybody that's got a mine that's anywhere near production is going to benefit greatly in this next run-up, because if you can get a mine in production in 2 or 3 years, then, which is pretty optimistic, as Brandon said, because you've got all the regulatory stuff. It's not the physical problem of building the mine, it's getting all the regulatory hurdles out of the way. And those hurdles get bigger as uranium becomes more popular. It's a very, very true statement.
And Brandon, oh yeah, sorry, Malcolm, go ahead.
I see that the last time this happened, we had Cigar Lake, which is a giant mine, coming on stream. And one of the reasons, or part of the reasons that uranium prices went up is because that mine flooded more than once, twice. Severe flooding did a huge amount of damage to the equipment down there. And the operation of that mine, as Brandon rightly said, takes a lot of skilled workers. That's the real reason that Cameco didn't shut it down and preferred to shut down McArthur River. It had similar problems, but Cigar takes a lot of expertise to keep it running. They don't want to shut that mine down at all. So when you have the situation that we've got now with no mines coming on stream, none of any significance anyway. The Salamanca mine in Spain is quite a small mine. It's not really that significant, really. So when you have this situation and you have no Cigar to fall back on, you have almost all of the mines done within 10 to 15 years, and you're going to run 400 reactors or 300, whatever the number is, out 80 years, you've got to ask yourself, where is this uranium coming from? And it cannot. And plus, you've got the impact of China, which is huge. I think very much underestimated the effect of China on this market in the next 5 to 10 years. So when companies, the utilities, particularly in the States, come out to start contracting, where are they going to get the mines to lock into these 10, 15-year contracts? They're not there. So that's why I think the demand situation is getting much better. The supply situation is getting much worse. And the combination of those two things, I think, is going to hit around about 2020.
And Brandon, Kazakhs come online. They're at 70 million pounds. Make it up. What's your view on that and the impact?
Yeah, well, I don't think I can add anything to what Malcolm's just talked about. But what I wouldn't mind doing is questioning, adding to the long list of voices, questioning why Kazatomprom would even do that. They did recently confirm to the London Stock Exchange that they would be holding the 20% reduction against their subsoil use contract requirements. And every single, let's say that there's a market commentator out there who provides industry information who sees this as a risk, and it helps them to find some fairly conservative numbers going forward. So they've picked a number and they're describing a risk that Kazatomprom just effectively get greedy. They see $45 uranium and they can't help themselves but ramp it up. But you've got to wonder, why would they do that? Because $45 on every single dollar that the uranium price increases adds 100 cents to their bottom line.
Yeah. And
the production that they would bring on is incrementally higher cost production. They have underinvested for quite a significant amount of time. If you track the amount that Kazakhstan has invested, and Kazatomprom in particular, in its projects since 2012, it's fallen off a cliff. Mm-hmm. The money that was raised in the IPO recently all went back to the Sovereign Wealth Fund as a shareholder vendor into the IPO. They weren't recapitalising the company.
Yep.
And they only made $160 million of profit last year, which I think is, if the lowest cost producer in the industry, who's responsible for circa 20% of industry production, can only net $160 million, I think it says vast volumes about the health of the sector at the moment.
Yep.
So why
That's
would
a really
they do
good
that?
point, Brandon.
I beg pardon?
That's a really good point. I don't see the Kazakhs rushing to sell uranium cheaply anymore. I think their mindset has completely changed over the last 5 years. I see them taking a more measured approach, a more Western approach, if you like, to protect and preserve their asset for the future. Because I'm sure they would rather sell uranium at a much higher price than $45. That's why I think it's going to go much higher than 45. It can't be at that level. It's too low.
Absolutely. And Kazatomprom is, in some respects, it was only in the business of producing uranium. Then it joined the business of producing and selling uranium at a profit. And now it's joined the business of selling uranium at a profit and selling shares.
Yeah.
Because it has only let 15% of its capital structure go in the recent IPO. It flagged a willingness to sell another 10%, and it should be regarded as a gradual sell down by the Sovereign Wealth Fund. Understandably, they didn't want to let too much of it go when the market capitalisation is only $3 billion. But as you start to see that value grow, they'll want to recapitalise the Sovereign Wealth Fund and deploy those funds into other activities. So they've now learned to have one eye on their profitability and one eye on their market prospects. And that inbuilt optionality, whether it's perceived or real, doesn't matter. But the optionality that they've got to move from circa 56 million pounds to 71 million pounds is actually more valuable to the stock as withheld inventory in a rising market than belting that material out there and trying to capture a little bit more market share.
Yeah.
So
exactly right.
Let's talk about how this unfolds, and I want to touch on geopolitics. One of Malcolm said something that plays right into what our house view is here, which is, China and Russia really are the dominant players in the nuclear industry, and as Malcolm touched on, China doesn't have much uranium, nor does Russia. And so, therefore, they need to be going out buying. When you think about the uranium-producing countries in the world, well, the Russians and Chinese have joint ventures with Kazatomprom and Kazakhstan, but they then need to go elsewhere. And they're not going to the U.S., they're not going to Australia, and they're not going to Canada to buy controlling interest of any mines there because they won't be allowed to. which kind of leaves Africa, and there they can get they can buy easily, essentially, and as we look at the landscape, one of the things that we think is interesting is the ability when companies in bear markets it turns into a bull market. Investors like to see those who have been consuming cash to producing cash. They tend to gain attention, and when you combine those have been that quality and where the market's heading from a geopolitical standpoint. Brandon, talk about how you view Africa. Talk about Bannerman. Talk about, because one of the things with Bannerman is you hear you're one of the most advanced. I think you're the most advanced project out there, but a higher cost structure. So talk about incentive pricing for you, and talk about how you see the Bannerman story unfolding.
So you're quite right. We don't try and position ourselves as lowest quartile cost producer. On our published DFS numbers, we have a break-even point of $52 a pound. We are doing some significant work to bring that number down, and we will bring that number down, but we won't be bringing it into the 30s. That's just the nature of the project. What our project does have is some very significant advantages in its scale. We've got an average life of mine production of 7.2 million pounds. Its advancement, we completed a DFS some time ago, and that enabled us to move to effectively a pilot plant with our heap leach demonstration plant. As I said, we've got the environmental and social approvals in place. We've got a retention license, which gives us long-term tenure. And we're in Namibia. And I can't emphasize what an advantage that is. Apart from just being a nice place, as I said at the beginning of our conversation, Namibia really is the premier jurisdiction when you take all factors into account for starting a new uranium mine. You've got levels of social, political, government, community support that is only dreamed about elsewhere in the world, including in Canada. You've got excellent infrastructure with a deep water port only 40 kilometres from where our mine is, or where our mine will be. We don't have social issues. We don't have people to displace from our mine. And the infrastructure and the history of uranium is so well established in Namibia that despite being a country that does have some other challenges, nonetheless, the regulatory environment is stable and sophisticated when it comes to uranium. The other thing about Bannerman's Etango project is it is really simple. It's big, and you shouldn't underestimate it because of its scale and its size, but it's about as simple as you can possibly get when it comes to uranium mining. You basically, the material is sticking out of the ground. It is outcropping. So it's an earth-moving exercise in terms of moving a large quantity of tons of ore, crushing it down, putting it on a heap leach. And because of the 2-year demonstration program that we ran, the heap leaching itself is very simple, very effective, and produces a 93% recovery. So all of those factors position Bannerman in an interesting place. If I use the last consolidation round that we had in 2006, 2007 as a proxy for what we can expect as the uranium market recovers, what we saw there was, first of all, the consolidation factors that are typical of any resources sector bull market. You saw the majors trying to get bigger than each other. You saw the mid-tier aspirants trying to become majors through acquisitions. In that sector and that time, you did see examples of diversified majors trying to increase their uranium exposure. And whilst we might not see that this time around from the very significant majors, I think we will see intermediate-sized diversified companies looking for uranium exposure. And uniquely to uranium, there's a very interesting aspect of the consolidation round, which is sovereigns seeking to secure their long-term nuclear futures through acquiring uranium assets. And we saw that with the Chinese acquisition of Husab, the Russian acquisition of the Curzio River, and another number of other smaller acquisitions, including in the aftermath of Fukushima investments, as you've highlighted, from China into Langer Heinrich, Fission, and others as well. So from a Bannerman perspective, our neighbours are largely Chinese controlled now. The Husab mine is only 20 kilometres from Bannerman's Tango project that is fully Chinese owned. Rossing will most likely shortly be owned by CNNC. Langer Heinrich is 25% owned by CNNC, although they do have an extended level of control via a right of first refusal over that mine. There is CNNC via a subsidiary, Zhongwei Resources, has a mining license that's yet in production next to Rossing. And it makes a lot of sense for the Chinese and others to look to Namibia. Namibia is the only uranium mining jurisdiction in the world that has a strong, proud history with Russia, a strong, proud history with China, and is very comfortable looking west and regards itself as an ally to the US. That puts it in a very strange and unusual situation. Because if you look at Kazakhstan, they're well aligned with Russia, of course. They're very good friends with China, very difficult relationship with Russia, with the US, which has been obviously complicated by Section 232 at the moment. Australia, you would say the same thing about its relationship with Russia. Canada, you would say the same thing about its relationship with Russia, and to a certain extent China, because Ottawa won't allow Chinese companies to fully own any uranium assets in Canada. Niger faces entirely to France. So very quickly you work through the list of significant uranium producing jurisdictions in the world, and you realise that Namibia is the only one that can play every side of this geopolitical game that's developing. And I think that puts it in an exceptionally interesting position, particularly as we start to see some of the implications of 232 unfold later this year.
So let's just talk before we wrap up here. One of the things that I often get asked is, oh, geez, okay, let's say I believe your thesis. It kind of makes sense if I believe it, if your work is right. How come we're not seeing the purchasing? And I say, well, look, 232 has created a paralysis at the utilities. They don't know where they're going to be. The U.S. utilities don't know where they're going to have to be buying their uranium from, at least up to 25% of it. What's your view on your overall House view on 232? And talk about what your view is on why it has, and if you agree that it has created an overhang to purchasing in the long-term contracts.
Well, I absolutely agree that it has paralysed the procurement strategies of the US utilities, and it's also given an incentive to the non-US utilities to sit and wait. Our house view is that we've looked at a dozen or more Section 232 scenarios, various levels of domestic quotas that include or exclude allies, tariffs that include China, tariffs that include allies, opportunities for the Department of Commerce to recommend systemic fixes to some of the challenges, such as fixing issues in the US merchant power markets or green tape for miners, and even some more interesting scenarios, such as using a quota system to apply to US-controlled uranium. So it doesn't have to be domestically mined, but it helps to address some of that, the point that you raised earlier in the discussion about the fact that the US has totally lost its agenda when it comes to the nuclear industry. Maybe this is a mechanism where Trump would find it a good idea to empower US companies to go out there and start acquiring what remains of the international open uranium market. But the point is, Mike, when I look at every single one of those scenarios, there will be winners and there'll be big winners. But from a uranium point of view, I just don't see losers, except maybe the petitioners if things go against them. So the fact is that because this process has been going on for 18 months by the time it's resolved, the fact that the uncertainty lifts and the fact that the impediment on procurement activity, particularly term contracting, goes away, in whatever form it lifts, it removes that uncertainty and we will see activity, and we will see that activity leading to an increased uranium price. So from our perspective, from Bannerman's perspective, that's the first aspect. The second aspect is, I think, in many of these scenarios, being in Namibia for the reasons I just described puts us in quite a privileged position. The US is keen to emphasise that Namibia is an ally to the US, try and wrestle Namibia's influence away from the Chinese and the Russians. So I think Namibia would be likely to benefit from any extension of tariffs or exclusion of quotas to allies. And the key point here is that come middle of July, there's going to be this huge sigh of relief all the way across the industry at a time when a number of very positive effects of the nuclear demand growth story are concertinaing into World Nuclear Association annual symposium in London in September. So there's a number of things that you track, that Malcolm tracks, that I track, but no one's putting them all together like a jigsaw puzzle that spells this very positive trajectory for nuclear. It's the work of Michael Schellenberger. It's the fact that the World Nuclear Association's managed to get on the agenda and a seat at the table at the Intergovernmental Ministerial Climate Change Group. It's that type of positive news that will draw the industry together at a time when they finally know what's happened with 232. In London in September in WNA Symposium, and then a week later at the IAEA annual meeting in Vienna. So I think what we'll see is activity in a much broader sense, including with generalist investors, coming out of that whole process in the back end of the year.
I think you're right there, Brandon. The sentiment towards nuclear is changing. Fukushima's fading off into the distance now. A number of environmental groups are now realizing, probably with the exception of Greenpeace maybe, but many of the
don't hold out for that one.
No, I won't hold my breath. But just good people, just a little misguided sometimes. But one of the things that I think is changing is the whole view of nuclear power as a means to stop or reverse climate change. Whether you subscribe to that or not, it doesn't really matter. The important thing is that people are looking at nuclear power as a solution to that, and certainly that's the main driving force in China. Part of it is energy independence, but it's also to improve the atmospheric conditions in many of the big cities in China. So there's a whole environmental aspect towards nuclear power that is changing very rapidly, I think. People are no longer ruling it out as an option to power their electricity grids. And certainly, although that's more prevalent in the West, I think in countries like Bangladesh that's building 2 Russian PWRs, Turkey, Saudi Arabia wants to build 16. This is the most oil-rich country in the world, turn into nuclear power. Why would they do that? Well, they've got very good reasons to do that. It's because it's a very dense energy source. It's environmentally friendly, probably more environmentally friendly than any power generation source there is, and certainly the safest. So I think the whole attitude towards nuclear power is changing. And once that occurs, I think a lot of the uncertainty will come off the market. One of the uncertainties, fuel buyers hate uncertainty. I've spoken to many of them over the years. They like things steady state, out into the distance. They like a regular fuel supply that comes in the truck every so often. That's what they like to have. When there's fuel uncertainty, they don't like that at all. 232 is not what they want at all, and they've expressed that in many forums in the US. Although it affects only the US, I think it's the whole industry. I think it's put a lot of things on hold, which just means that the backup once the dam bursts is going to be even that much more significant. But I think a lot of countries are turning to nuclear power. A lot of countries that said they weren't going to use nuclear power have now changed their mind. That whole mantra is changing, and particularly with the backdrop of climate change and the fact that renewables really can't do the job as much as you may like or dislike them. Their energy density is too low in order to provide reliable power to grid-size operations. Nuclear power plants run day and night, 24 hours a day, 7 days a week. You can even make them load follow, as the French do. by clever refueling. So I think the whole mantra regarding nuclear power is changing dramatically, and I think that, along with the removal of the 232 uncertainty, is going to be one of the catalysts that starts driving the price up, because that uncertainty exists right now, right across the industry, and it's stopping investors investing, it's stopping utilities buying, it's constipated the whole market. Once that is removed, the floodgates will open.
Well said.
That's just my personal view, but I'm pretty sure that's the way it's going to unfold.
Well, guys, I can't thank you enough for the last couple hours of your time. It was a wide-ranging discussion, and hopefully, I think listeners will enjoy the content.
Thank you very much, Mike. I appreciate the opportunity to talk to you and listen to Brandon, and got some very interesting insights there into the mining side of this business.
Yeah. Brandon.
Yeah, thanks, Mike. We always have good conversations, but it's kind of fun to have a conversation with a few folks listening in.
Yeah, absolutely. All right, fellas, I'll be in touch soon, and thanks for your time.
Thanks, Malcolm.
All righty, cheers.
Bye now.
Well, I hope you enjoyed the conversation with Brandon Munro from Bannerman Resources, the CEO, and Malcolm Rawlingson, who's on Twitter and a nuclear engineer for a long time, 50 years. Bring some really interesting insights. We took a trip around the world of nuclear power, and I hope you gained some insights, and we'll be back next week and look forward to speaking with you. Thanks.
The information presented on Talking Stocks Over a Beer is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.